We'll start up in about 15 seconds. All right, welcome to Sales Tax is Coming. This is Bob Bickle, and I'm the founder of RunSignup. And we're going to be doing a sales tax webinar today. With me in the room here is Kevin Harris, our Chief Financial and Operating Officer, and he is also being come to known as Tax Boy.
not happily come to being known as Tax Boy.
Sure you are. And Allison is also here. She's our GiveSignup leader, and she's going to help us out with questions. And also on the call is Johanna, and she's going to help us facilitate and so forth. Hopefully everybody can hear us. If you can't hear us, I guess you never heard that question. So while we're going through this, feel free to post questions into the little GoToMeeting questions box. Those will get logged, and Allison will be asking those questions of myself and Kevin after our presentation, or maybe interrupt us if it's something that's really pertinent or something like that. And also, just like our last webinar, we'll do a very complete blog and kind of answer every question in detail in written form. So there's a history of it and all that kind of stuff, so people can review it. All right, Kevin, I'm going to have you go for the first few slides, and then I'll do the last few slides.
All right. So let's just start off with a disclaimer. I'll read this, and then we'll hop into the content. RunSignup does not provide tax, legal, or accounting advice. This material has been prepared for informational purposes only and is not intended to provide and should not be relied on for tax, legal, or accounting advice. RunSignup makes no representations, warranties, or assurances as to the accuracy, currency, or completeness of the information provided in this presentation.
Kevin, you sounded just like the start of a quarterly broadcast for a public company. Yeah, earnings call. Nice job.
Okay, so let's hop into the content. And for those of you who attended our webinar in August, the first 5 or 6 slides are going to be the same content. I'll probably go through them a little bit more quickly, but then we've got some new stuff to add on to that. What we've been doing since then to get RunSignup ready to help you and to help us with this compliance obligation, the implementation timetable, and some other things. So let's get started with the sales tax environment is changing quickly. In fact, it's changed. What kicked this all off was a lawsuit filed by South Dakota against Wayfair. And basically what that lawsuit said was it's not fair for Wayfair to be able to ship goods into the state of South Dakota and not have to collect sales tax on that. It wasn't fair to the sellers inside the state, and wasn't fair to the state who had all this merchandise or commerce coming into their state and no ability for sales tax to be charged on that. And South Dakota won the case. And basically what that did is it cleared the way for states to be able to charge sales tax on interstate purchases, and put teeth into this concept of economic nexus. Next slide, I'll go over that, and we'll talk a little bit about what economic nexus is. It's important to note that this law did not make anything new taxable. It only allows states to tax or collect sales tax on interstate sales. So this didn't make a race registration taxable or not taxable in the state of South Dakota. It just basically allowed South Dakota to enforce the laws that were on their books for interstate sellers that were selling into their state. In addition to all of that, this kind of cleared the way for what are now called marketplace facilitator laws. And these state laws compel platforms like Amazon, eBay, and RunSignup to collect and remit sales tax on behalf of their sellers. So our sellers are races and events that set up on our site. They're coming onto our site and they're selling their registrations and maybe merchandise and giveaways and other things. So they are the seller that's mentioned in this facilitator law, and that's who we're collecting on behalf of. There are now 37 states that have marketplace facilitator laws. Our last webinar, I think we did August 29th, and the count is 3 more than it was on August 29th. So
who got added?
Ohio got added, Massachusetts got added, and Wisconsin got added. Yeah, so 3 additional states. The 37 includes DC. There are only 45 states that have a sales tax. So 36 of the 45 have them today. So there's 9 more to go. And the experts that we've worked with that have been consulting with us on this whole process believe the other 9 may fall within a year, such that all states will have a marketplace facilitator law. And basically what these say, or what these laws say, is that RunSignup and other platforms that facilitate the sale of registrations and tickets for sellers will need to comply. So I mentioned this a minute ago. What is Nexus? So the old sales tax laws prior to Wayfair basically said that you needed to have a physical presence in a state to be compelled to collect and remit sales tax. So that was a brick and mortar store or a distribution center, or having an employee in a state created this idea of Nexus. And Nexus is basically the connection between a state and a business. So really only sellers that had this physical nexus had to be concerned about collecting sales tax and remitting it in that state. States started to put on the books this concept of economic nexus probably several years ago. I know California's law is several years old, but it really didn't have any teeth in it. It was intended to try to capture internet commerce, but before Wayfair, states had really not much ability to be able to enforce that law. So South Dakota versus Wayfair empowered these economic nexus statutes. Basically what they say is that it's not unreasonable for a state to expect an interstate seller to collect and remit sales tax in that state, but the state has to define a reasonable minimum amount of sales or transactions into a state to establish nexus. South Dakota's minimums that they established were 200 transactions and $100,000 worth of sales.
And or.
So either one of those 2 things trips an economic nexus provision for a particular state. RunSignup will have 6 million registrations this year and across all 50 states. So RunSignup has economic nexus really in all 50 states. Some states have differences in their rules, but based upon that 200 transaction limit, it's really a very low bar in order to create economic nexus in those states. And then above all this stuff, marketplace laws are now overriding even these nexus considerations. Many of the marketplace laws don't have a nexus concept in them. They basically say if you are a marketplace and you are facilitating sales for sellers, then you are required to collect and remit on behalf of those sellers.
And it's kind of good and bad, right? I will tell you that this sales tax project has been very, very difficult to implement, right? Now, if all 20,000 races that used RunSignup had to develop that sales tax implementation, it'd be very difficult for them to do that, as well as, just the logistics of 20,000 entities collecting tax and paying tax and so forth. Whereas a marketplace law makes kind of sense. It's a pain for us, obviously, but I think in the long term, I think it kind of makes sense and is good.
Yeah, I agree with that. The marketplace law is a benefit to a race that otherwise might have to figure this out, get the rates, collect on their own, and remit a report to the state. So there's a benefit there. It is also, though, creating some new exposure to what might be taxable, something that's always been taxable. Now that states are able to go after these platforms, they put an additional burden on those platforms who are concerned about compliance to be able to make sure that all of the business that's going through their platform is compliant.
Right.
Okay, so what did we do? What are we doing about sales tax?
We're rewarded the state.
So we commissioned a sales tax study. In fact, we commissioned 2 sales tax studies. And what we looked at was, and you'll get to see this matrix in a few minutes, but what we looked at was across all of the 50 states and the District of Columbia, what are the common items that are sold on RunSignup, things like races and merchandise and processing fees, and in what states are they taxable? And this was really not having to do so much with Wayfair, but just basically going state by state to determine what is the rule that are on the books for whether or not those items are taxable or not. And part of that also is we made a determination in what states RunSignup will collect and remit on behalf of races, these marketplace facilitator states, and in which states races will make their own decision on where to collect and remit. And basically every state will be one of three things. It will have no sales tax at all. It'll be a marketplace facilitator state, in which case RunSignup will collect and remit on your behalf, or it will be a non-marketplace facilitator state, in which case we will offer sales tax functionality and races can make their own decision about whether or not they want to turn that on for their race. We've also, as Bob mentioned a minute ago, and this has been very, very complex, we've been updating the RunSignup platform to incorporate sales tax functionality. We've incorporated the logic of this item taxability matrix into the race setup and checkout process. We've connected to a sales automation platform, and we can confirm that that platform is Avalara. I don't think we talked about that as much on our last webinar, but Avalara is the company that we've chosen to do the rate calculation for us, to return the rates by way of their API, and also in the marketplace facilitator states to actually file the reports on all of our behalf. And we've also been building new RunSignup sales tax reports to allow states in non-marketplaces to be able to do your own sales tax reporting. And you'll also be able to see in your race when RunSignup is doing sales tax reporting on your behalf. You'll be able to see sales taxes that were collected in both a summary and detailed fashion, and know in your race which states you have an obligation and what states RunSignup has an obligation to file sales tax. And basically, we've been preparing to implement collection remittance in those marketplace states and are getting ready to do that very, very soon. So what kinds of things are taxable? This list of items is different in every state. Every state has their own rules on taxability. And we're going to talk about nonprofits a little bit more in a minute, but in some set of states, race registrations are taxable. Merchandise is taxable in almost every state. Memberships are taxable in some set of states. Tickets or admissions are taxable in some set of states, and processing fees are taxable in some set of states as well. Some states also have some complex exemptions for race registrations, or for the amount of time or number of events for which a nonprofit can be exempt. And I'll go into a little bit more in a couple slides on nonprofit exemptions, but one example of this complex exemption for race registrations is the state of Florida. What the state of Florida says is that if you are offering race registrations, they are taxable. However, if you are also offering for a ticket for a spectator to come and watch that race, or a registration for a spectator to watch that race, then your race registrations are no longer taxable. And so we've had to learn about these quirky, complex exemptions, and we're trying to build that logic into our code as we've been building the sales tax functionality within RunSignup as well. Okay, so nonprofit exemptions. So this is an area that has come up quite a bit. Nonprofits are exempt from federal and state income tax. In most states, nonprofits are exempt from paying sales tax, where the nonprofit is the buyer. In the case that a nonprofit comes to do business with RunSignup and wants to offer a race or wants to offer an event on RunSignup, they're not the buyer of that service. They are the seller. They are coming onto our site to sell registrations to their race. They may be opening up a store to sell merchandise to their registrants or to their customers. They may be using a donation website or enabling donations as part of their race, and they're selling donations. So this has been a very common misconception. Nonprofits oftentimes think, hey, I've got this exemption certificate I got from my state, that makes me exempt from sales tax. And for one part, they're right, but it only makes you exempt from sales tax if you are the buyer of services and otherwise taxable merchandise, not if you are the seller of those items. So that's hopefully it helps to clear that up a little bit. To further maybe confuse it now, there are a limited number of states that do exempt nonprofits as the seller, and that's a different process than that exemption certificate that you have. We have just recently finished up understanding the rules in all the states as to when a nonprofit seller can be exempt from having to collect sales tax. And that collection benefit comes both in the non-marketplace states where you would have had to file your own return, as well as in marketplace states where RunSignup is collecting on your behalf. And we're building logic into our system so that when you set your event up on RunSignup, you'll get a series of questions that you'll have to review and figure out, does my nonprofit fit that set of questions? And then you'll have to do a certification that I do or I don't, and then that will enable that seller's exemption for you if you qualify based upon that set of information that creates an exemption for you. Okay, now we're going to move into the taxability matrix that we talked about earlier. So be patient if your state is in the alphabet after Mississippi. We've got the other half of this on the next slide, but I want to use this opportunity to go through each.
And this matrix is getting published live today via our blog. So the latest sales tax blog actually has links to a live version of this that will be our living document. And as additional states change things, we'll be updating this.
Yeah, so we spent a lot of time and money trying to get this matrix correct, because this is the rules on which RunSignup taxability will be based. This is where the logic is going to come from when you set up a race in the state of Alabama, for instance, on whether or not race registrations are going to have a sales tax in that state. So let me start and go left to right on these columns and explain what each one of these mean. So the state, that one's kind of obvious. That's each of the 50 states, and the District of Columbia is listed here. The next column to the right of that is titled Tax on Race Charge or Admission, and that is a race registration. And so then that goes state by state and indicates what our research tells us is the taxability of a race charge in each state. So a yes indicates that we believe that a race registration is taxable. You can see those next to Alabama and Arkansas, for instance, where our research indicates that race registrations are taxable in those states. Next column over is merchandise. So if you open up a store, if you have a separate charge for a giveaway or a separate charge for an add-on, and that is merchandise, think clothing, shirts, hats, cups, iTabs, all of those things are, or this matrix shows the taxability of that. Most states tax merchandise. The ones that have no here are typically states that have no sales tax at all. There are some quirky rules for clothing, for instance, in some states as well. The state of New Jersey does not tax clothing, but they do tax athletic specific clothing. So when you set up an item on the store, we'll have a question or an ability for you to map your clothing item to one of those taxability codes. And that will tell us when we call Avalara to get the rates as to whether or not that type of clothing or that type of merchandise is taxable in that state. Another example of that is Michigan. I believe the first $100 worth of clothing is non-taxable in Michigan. So Avalara and RunSignup would look at that in terms of the dollar value of the transaction against that taxability code and return back the appropriate rates and the appropriate taxability for those types of merchandise sales. The next column is memberships. And this is really those memberships to your running club or your social club. And it indicates state by state whether we believe that they're taxable in those states or whether or not they're not taxable in those states. And that's yes and no answers for each state.
It also applies to USAT annual membership.
It does, and USAT is a little bit complicated because USAT ships a magazine subscription with their annual membership, and what that does is it makes the USAT membership look like merchandise because they're now shipping a magazine. And as we covered a minute ago, merchandise is taxable in every state that has a sales tax. So this column on memberships won't apply exactly to USAT because of the fact that there's a magazine subscription involved. Next column over, nonprofit sales of taxable merchandise and memberships only. So what this column is designed to do is it's designed to say, if you look at the column for merchandise and you look at the column for memberships, and if either one of those is taxable in that state, the column after that tells you whether or not there might be an exemption available for a nonprofit seller of merchandise or a nonprofit seller of memberships. And so you'll see the word exempt that will say that there is an exemption available for a nonprofit. Also, the taxable plus. That means that there's a limited exemption available, and that might have to do with how many dollars worth of merchandise you sell in a year or how many days you sell merchandise in a year. And this will be embedded in these set of rules that you'll get to see when you set up your race or event to say, hey, in the state of XYZ, I don't plan on selling merchandise for more than 30 days, and I don't expect it to be more than $20,000 worth of merchandise sales. And if you're able to fit that kind of criteria, you'll be able to take an exemption. That's what those taxable plus and taxable asterisk are about. There is an exemption available, but it's limited, and it's got some additional rules that go along with it. The next column to the right of that, tax on race charge and tickets, admissions, nonprofits. So this is, you're a nonprofit, and you're selling race registrations, or you're selling tickets, admissions to your event. This basically lets you know, is that an exempt sale for a nonprofit? And you've got the same kind of yes and no answers there. Once again, some of these yeses have got stars next to them that have got an additional qualification next to them. So basically what it means is there's going to be an exemption available, but it might have a qualification next to it that tells you how many days that you can be available for registrations or how many dollars worth of registrations you can sell. I'm going to jump back to race charge just for a second and talk about Georgia, and then I'm going to flip this slide so I can talk about the last couple of columns, and you can see the balance of the states. So on tax on race charge admission next to the state of Georgia, that says no # next to it. Georgia actually is yes, but they just passed a law that said that race registrations will be exempt 20 days from when that law goes into effect. And then they didn't give an effective date. So, so we think that's going to be probably in the next month or so. Generally, we think that's a good thing. We think Georgia has gone to no, but it's a little bit in the future as to when that happens. And it's yes on the system up until when that takes effect.
So a question here, just as an example, and we don't want to get into the details in each one of these, but just throw out an example here. Nonprofit, California, the race registration is not taxable. The merchandise is taxable.
That's correct. Yeah. So California says, California, their race registration wasn't going to be taxable in either event because it's not taxable for-profit companies or not-for-profit companies. But there is no exemption available in California. It says it's taxable for merchandise.
Gotcha.
So potentially, if you are a seller of merchandise in the state of California, you may already know this. If you've got a store or some kind of physical presence of selling sales that you should or maybe are charging sales tax on it, but it's the same as if you were selling it on RunSignup.
And how does that affect giveaway items like the free t-shirt that you get with your registration or the medal you get for completing the race?
Yeah, so basically we are following a standard that says what is the primary object of that transaction, and the primary object of that transaction is the race registration. And our standard says that a free t-shirt or a medal that you might receive is really incidental to that. It's not really the primary reason that someone is making that transaction. So basically the way this taxability works is, what does the registrant see in the cart when they go to check out from RunSignup? And if they see a charge on race admission, it follows the taxability rules for that, or for registration, I should say. If they see a separate charge for merchandise, then it will follow the rules that go with merchandise, and the same thing on memberships. If there's a little bit of merchandise embedded in a registration, we ignore that because it's not the primary reason why we think that that someone has signed up for that race. So I'm going to skip to this second chart so folks can see the balance of these states, and I can talk about the last couple of columns on here. So we got through, I believe we got through tax on race charge and tickets for nonprofits. This basically gives us yes and no's. And this does tend to have more exemptions than the sale of merchandise and memberships, meaning in more states, a nonprofit is going to be exempt when they sell race registrations or when they sell admissions. Merchandise and memberships, probably in a few more states, they're going to be taxable and have less exemptions in those areas, or more qualifications on those exemptions. Getting to the last two columns here. So the second to last column, RunSignup to collect and remit to state on your behalf. So this is a list of yeses for marketplace states and no's for non-marketplace states. So once again, in a non-marketplace state that has sales tax, that capability and that ability to get the rates, do the calculations, collect the tax, all works, but the race has the option as to whether or not they want to turn it on. And if they do turn it on and sales tax gets collected, we're going to remit that to the race, and they're going to file their own sales tax return in those states. For the states that say yes, the marketplace states, RunSignup will do exactly the first part, which is that we'll get the rates, we'll do the calculations, we'll collect the tax, and we will pay that tax on behalf of all of the sellers that are in those marketplace states. We'll do one big return to the state of North Dakota, for instance, for all of the sales that have occurred on RunSignup that are taxed or sourced to the state of North Dakota. And then the last column on here is what is the tax treatment on processing fees? So the amount of money that RunSignup charges to process a registration or to process a donation or anything that's sold on RunSignup, they're not taxed in that many states. But that's what this column indicates, is the no's are states where that type of sale is exempt, and the yeses are states where the processing fee is taxable. Okay, that takes us to exceptions to the chart. So these are the rules that we're going to follow, and these are the rules in both the marketplace and the non-marketplace states. If the rules don't meet what your tax advisor says in a non-marketplace state, you don't have to turn it on. You don't have to do those collections. In a marketplace state, we are going to over the next 30 days turn on all of the marketplace states, and that matrix that we just covered are the rules that we're going to use to figure out how we're going to do taxability in each of those states for each of those different types of items. Same thing for.
Can there be any exceptions to that, Kevin?
There cannot be exceptions, Bob.
Thank you, Kevin.
So,
I'm just trying to help all of our poor support people, finance people, sales people. What are the race saying? But I don't want to get taxed on my race.
Yeah. And in a marketplace state, these are the set of rules, or the set of rules that we're going to follow.
Because we're on the hook.
We are.
Yeah.
So this is an interesting set of laws, because RunSignup gets an obligation for collecting and remitting these taxes. And the first place that, if they don't get collected and remitted, the first place that the state is going to look is going to be to RunSignup. It's sort of a shared obligation in that if for whatever reason RunSignup didn't do their obligation, they may further go and look at the races, but they're going to look at us first. And so That's why we spend all this time and money and effort trying to get this right, so that we don't create a obligation that we're not handling properly for ourselves and for all of the races. So we talked about this last point in the last webinar that we did as well. There are some quirky rules around particularly race registrations. We talked a little bit about Florida. Minnesota's got a quirky rule. We talked to a lot of folks in Texas who believe that race registrations were exempt in that state. Our original matrix said they weren't. And what we asked people is, if you think our matrix has got something that needs to be updated, let me know about it. But when you let me know about it, don't do it in an anecdotal way. What I really need to have is the state statute. I like highlighting. So if you can find the exact rule that fits what you're talking about, highlight it in the state statute, send it to me. We'll verify it with our sales tax attorney. And we have updated, we probably updated half a dozen cells maybe out of that several hundred cells that are on there.
It's one of the great benefits about us being so open and sharing our information, and you all sharing your information with us. It really makes the whole system that much better. So yeah, thank you for that.
Yeah, exactly that. We're open to that. We've learned stuff since August when we put our first matrix out, and if you've got something that is concrete and in writing and from the state, and those could be things like letter rulings, they could be the state statute itself. But if you see something that doesn't look right to you and you've got good solid evidence, we'll research it, chase it down, and we'll make corrections when and if they need to be made.
Okay, I think I take over here to describe how it works. So, this represents the back end of a person from Arizona signing up for a race in Madison, Wisconsin. And they are signing up for a $10 race, and they're also buying a $20 piece of clothing. So you can see up here, there's this $10 registration cost. You can see the Avalara tax code OA029338 and the PC 0401100, $20. On the right hand side, you start to see the calculation of the tax. And on the far right side, you see how that tax was calculated and allocated. In the state of Wisconsin and in Madison, 5% is taxed to the state and 0.5% is taxed to Dane County. And so that's calculated on each line item. So when we process a transaction, we break it into little line items and we say, for this line item, this is the zip code that applies. This is the jurisdiction that applies. Avalara, tell us how much that tax should be. Down here is the processing fee. In the state of Arizona, they tax processing fees. And I signed up. I pretended I was from Phoenix. And in Phoenix, it's even more detailed. So the state takes a cut. The town, Phoenix, takes a cut, and Maricopa County takes a cut. And we calculate all of that stuff and roll it up. So this is a little bit higher level view of that same transaction. And what it does is it shows in the red box, that's the transaction ID number in RunSignup. So these are part of the same transaction ID. And then the green boxes show the state and the sales tax and who that sales tax is going to be remitted by. In the case of processing fees, it's always remitted by RunSignup. In the state of Wisconsin, it was not a marketplace state. It is flipping to a marketplace state, but the race is responsible for the $1.65.
So you'll get to see this in a minute, and also when sales tax is available, which is going to be shortly. But there's basically going to be two types of reports that are going to be available to you. One is a summary type report by the state, and that gives you your taxable and exempt sales. And then if you want to drill down and see where did those transactions come from and how were individual line items taxed, that's what Bob just went through with you, was the individual transaction details. So if you're an accountant and you need to trace a transaction all the way back and see where the sales tax came from, this is that really line item detail. And one of the reasons we needed to provide that is a transaction could actually be taxed by more than one state, depending upon.
Well, this is a good example. If that piece of clothing had traveled to California, it would have been taxed under the California jurisdiction.
Yep.
And this, in fact, is a summary report that Kevin just alluded to. So at the top, it gives you a little summary of who's responsible by state. And in most states, you're actually paying the state, and then the state takes care of breaking it down into locality. But when you fill in your report to the state, you're going to have to fill it in to say that Maricopa County, Phoenix, the city, Dane County actually are due this much of the tax. And that's what the bottom half of this shows. So this is the summary information. This is in the standard type of information that people need to fill out their monthly state filing for sales tax. So under the covers, I wrote up a really detailed blog about what's happening underneath the covers. There's a bunch of stuff that's happening inside of RunSignup and a bunch of stuff that happens inside of Avalara. Let's step through these sub boxes a little bit because it's kind of important to understand what's happening. So in the RunSignup box in the top left, item definition. So this is the fact that it's a race registration, that it's a membership. For some of the items that are in RunSignup, we need your guidance and setup to determine what that item is. Kevin mentioned in New Jersey, there's clothing and then there's athletic clothing, and they're taxed differently. And so you'll have to specify each of your add-ons, the type of item that it is. And we've provided all the different types of items that races and nonprofit events would need and have, and we've coded that into our system and made it easy and available. That list of items that is coming from Avalara, they've defined literally thousands of tax items. That's that, we saw that little code up here, the OA029338. That's the item tax ID. The second thing that's needed is location. And it's more than just zip code, because some zip codes actually have two tax jurisdictions, believe it or not. So we take the location of whatever that item's taxability is. Kevin covered that in his segment. So processing fees is where the credit card comes from. Shirts is where the shipment is taking place, etc. And basically the idea is that we send those two pieces of information along with the amount over to Avalara, and they have a set of systems that they look at the taxability of that item and the location taxability, and then they return that information back to us at 55 cents in Dane County, for example. Now, there's two types of exemptions that can be taken when you pass over an item. One are a set of general exemptions, and a general exemption would be like what we're talking about for the state of Florida. No, not necessarily for the state of Florida. Let's say for the state of Texas. So Avalara believes that that tax item is actually taxable, but we've determined from our sales tax experts and customers' help, thank you, that it is not taxable. So we create a general exemption. The second type is a customer exemption. And this is typically, I'm a nonprofit, I'm exempt in this state. And so that is a system that we have to build. It's actually a pretty complicated system because of the different exemption rules that Kevin talked about in each locality. Our system, we've also done a set of reliability and availability features. So we actually keep a backup tax rates. So if Avalara is down, we keep that around, and so we can process transactions. So you're not going to lose transactions because Avalara went down or something like that. We've also automated refunding. So we're giving 2 ways of doing refunds, and there's a detailed blog on this. It's a pretty complex type of set of options that you can have. If we keep it simple, we kind of just automatically calculate everything for you, but you can go down and fine grain and return certain items, and those certain items that you return, like a shirt, would get the tax auto credited to the customer as well, the sales tax auto credited. And then we have a bunch of software that works with the Avalara software that produces sales tax reports, and for the marketplace states, all the payments and filing that we have to do. So it's not a simple system to build. So race setup. So this is what you need to do. So for marketplace states, don't worry about it in terms of turning it on. RunSignup will turn it on at some point in time in November, and we're going to roll this across states. And so we'll do a few states early, and then a gradual increase in the number of states as we gain confidence that everything is working well. For those marketplace states, RunSignup's going to collect, we're going to report, and we're going to pay. No muss, no fuss. For those of you in a marketplace state, it's going to be your decision whether to turn it on. If you turn it on, RunSignup will calculate and collect those taxes, produce all those reports, but you're going to have to pay the state. We're going to pay you the money. You're going to have to file your own reports and pay the tax to the state. And as Kevin said, probably a year from now, there's not going to be any non-marketplace states left, and people are probably going to be happy about that. There are a couple things that you can set up in the system, and those are going to start to appear today. Actually, we just pushed it out. So if you look under your financial tab in your race dashboard, you'll see a sales tax beta, and you'll see most things are kind of they're not turned on for you. We're going to turn this on for just a select few beta races to try it out first and make sure things work, and then we'll roll it out to more people. But there are a few things that you are going to be able to set up, and that will kind of increase some more next week. One is the taxability address. By default, we just use the race's address, but sometimes that's not appropriate. You might have a race that starts in one state and ends in another state, and so it should be in the finishing state rather than the starting state. Map add-ons and giveaways to correct tax code. So that's why I was talking about earlier. If you have an athletic shirt in New Jersey, you have to pick the right tax code. And then set your exemption status if applicable. This will be largely used by nonprofits. It may be used by Florida, where even a for-profit race would go in and state that we charge a participation fee and therefore our race is not taxable. So exemptions, races will have to complete an exemption form. As we roll out, we're going to make some assumptions for nonprofits that I'll talk about in a minute. But because the exemptions are so specific and so variable by state, races are going to need to do that on a race-by-race basis, and you're going to need to acknowledge that, and you're going to need to agree to that.
So in terms of this exemption form, though, we do all the work for you there. We researched and are very specific about what the rule of that state is. And those rules read something like, you're acknowledging that you're a 501c3 and you're organized under the state of Georgia. Georgia's a bad example because it's only religious, but you're organized under XYZ state, and you don't have, you have a certain number of days or number of events that you put on per year. So it's a very, very specific rule. And you have to click off and say, yes, I acknowledge that I fit that criteria, or no, that I don't. And if you don't fit that criteria, an exemption is not available to you. if you do fit the criteria, it is available to you. And in many states, it's going to be 2 sets of criteria. Many states have a different rule for race registrations and admissions than they do for merchandise. And we talked about that a little bit when we saw the matrix, but some states are going to have 2 click boxes for you to acknowledge 2 different things to be able to take an exemption for each of those different types of sales.
I want to make a note about something here. It's this final note. If you're helping a nonprofit by collecting the money into your own personal account or your own business account or something like that, and you're passing that on to the nonprofit, you will not be exempt from sales tax. And we will be doing a little check on that to make sure that the payment account is indeed a nonprofit. If you say, oh, I'm a nonprofit on that little checkbox, we're going to double check it. And because of the KYC stuff we do and the onboarding stuff we do, we'll be able to do that. Same thing is true for timers that are helping races and so forth. So I would advise you to get that cleaned up if it's not cleaned up yet. It's really easy to send an invite to to the nonprofit to have them set up their own payment account and get that set up correctly.
So if you're a timer for a for-profit race and you are doing the same thing, you're putting yourself in the middle of that money flow, and it is a non-marketplace state, you become the seller. So if there ever is a sales tax liability that goes along with that, that timer absorbs that because the audit trail would show that you were the one that got the money. You were the seller of those race registrations. So it's something for timers to think about whether or not they want to be in the middle of that money flow, either for a nonprofit, which could hurt the exemption, or for a for-profit race, in which case, if it's in a non-marketplace state, it could create liability.
And Kevin, could you just reiterate what you are saying about location and whether the laws apply based on the race location versus where the event operator is located? So for an example, an event company that is based in Alabama, but who puts on a race in Florida.
Yeah, so if we go across the columns that are in the matrix, the first column is race registrations or admissions. So our interpretation of the sales tax laws is that when someone comes on to buy a race registration, they are buying a service, and that service is delivered at the location of the race. So if someone comes on, they buy a race, and they go and show up that day at the race, and that's where that service is delivered to them. So that's where sales tax emanates for that race. And so that's why when you set up your race, that's kind of the key address. And we're going to try to populate that for you automatically. Sometimes we can't get a valid address. You might be having your race at a park or a trail or something like that that doesn't have a valid address for it. That's really what setting your taxability address is all about, is just getting a valid address that's as close to that race address as possible, so that the sales tax is calculated for the locality, the county, the state where that race is actually taking place. So that's race registrations. Merchandise. Merchandise is a little bit different. Once again, it's based upon where is the merchandise delivered. That could be a couple of common places. One could be that someone buys merchandise and they pick it up from you at the race location. So once again, you're back to the race location. That's where that merchandise is going to be taxed, at that race location that you set up initially. Sometimes you're going to ship it to them out of a store, and then that item is going to be taxed where it is delivered. So the state and locality and jurisdiction that you shipped it to is where the sales tax is going to be calculated. Memberships. Memberships are at the address typically of the club. So that's where the benefit of the service that you're buying in a membership is delivered, at the address of the club. So that's where that tax will come from, is based upon that address. And then finally, processing fees. So you've actually got 2 different sellers, right? So your first seller is the race itself, who just sold all the stuff I just talked about, but now RunSignup is the seller of the processing fee. And the processing fee is really a right for a registrant to use the RunSignup platform to have access to that platform to register for a race. So it's a service that we believe is delivered to that registrant based upon where they live. So they sat at their computer and they had their credit card out, and that credit card had a billing address on it. That's the address that we use to tax the processing fee transaction. So we kind of talked and alluded about this a few minutes ago, that if you have a race that's in X state and you ship a shirt to Y state, and that registrant comes from Z state, you have potentially 3 different taxing treatments. They could be marketplace or non-marketplace. But that's what the complexity is all about of what RunSignup has done to be able to allow all of us to comply with this very, very complex set of rules.
We did have a comment about the shift from triangles, and those are Kevin slides, to the diamonds bullet points on the left-hand side, and those are Bob's slides.
Which are the official for our
The circle ones.
circles
That are not on
here? All right, here's the release timeline. The software actually really did get deployed at 1:59 p.m. today, 1 minute before this webinar started. And transactions are still flowing, right, Allison? Good. After this webinar, I'm going to take my little test race and I'm going to process some transactions and make sure that things are working, and then we'll turn on a couple of races of customers that we're working with to try it out. Next week, we'll be in limited beta. And at that point in time, the exemption software setup should be done. So at that point in time, if you're a nonprofit, you'll be able to go in, you'll be able to set up and acknowledge that you're a nonprofit in Pennsylvania, and you're good to go. And then basically the following week, November 12th, for the next couple of weeks, we'll roll out to all of the marketplace states and make it available to any race in a non-marketplace state to turn on optionally. When we turn that on, we're going to make an assumption in the system that if the payment account is a nonprofit, and we know that from the database, then we're going to set that automatically as an exempt.
If an exemption is available in that state.
If an exemption is available in that state, yes. And then by December 15th, come December 15th, we're going to turn that off. And that means that if you're a lazy nonprofit and you didn't set up and acknowledge your specific exemption, which you should be able to do starting next week, you'll have had over a month to do it. You'll have gotten like 20 different reminders from us. Then your nonprofit's going to start paying taxes. Also by December 15th, all different transaction types should be covered at that point in time. Right now, we've just focused on races, and by that point in time, we'll have tickets and memberships and the other items as well. So that's the release timeline. And now it's time for Allison to ask questions.
Yeah, okay, so there's a lot of different questions, but I'm probably going to start with the one that is on a lot of our listeners' minds first. So that is, what is the risk of retro liability for past registrations, merchandise, memberships that you've sold in past years?
So none of Wayfair or any of what we've talked about really impacts that particularly in a non-marketplace state. If you were liable for, or if a registration or merchandise was taxable in your state and you had Nexus, then you had an obligation to collect on that and remit to the state. This process doesn't do anything about that past liability if one existed, but it does allow you to be compliant going forward.
So that I'll talk about two things. One is that we're seeing increased activities from states going after this revenue. And so we do have multiple customers that have been audited and are paying back taxes to their states. And we think that an increasing number of states will become increasingly active because every state is looking for money. And some of these customers, it's like tens of thousands of dollars of back taxes that they're getting hit for, and the states want their money. The second thing is, I'll talk about it from a RunSignup perspective. So I spent a moderate amount of time this weekend. Stephen did some reports for me to make it a little bit easier, but I spent a moderate amount of time this weekend calculating like if we didn't release this software now, what would be our tax liability on RunSignup during all of 2020? And it's in the neighborhood of $5 million. And I did a calculation of potential back tax liability as well. And that is potentially close to $1 million if you take a worst case type of analysis to it. And so what we're hoping for is that if states do come at us for that back tax liability, that we will be able to negotiate with them, and that will happen over a period of time. We do have the financial wherewithal to absorb that, but we will be coming back to the races that make up that tax liability, meaning that the states are going to come after us. We're going to try to say, no, go get it from the races, because it's the races that really owe it. And the way that the flow of the contracts work is that races at the end of the day do owe that money. So it would be very, very messy, and hopefully it doesn't happen, or it doesn't happen in many states. One of the reasons why we're trying to be so proactive is to prove that, we're trying to do the best that we possibly can to live up to these marketplace laws. It does have implications for other marketplaces, and the longer they go, the more exposure to liability they and their races have. So I've talked about this before, is that this thing's kind of like a two-edged sword for our main business, forget sales tax. But we think that there's going to be some races that are going to be upset with us. Why are you collecting sales tax? I shouldn't have to pay sales tax. I'm going to have to go to some other registration provider. And that's okay, because we just don't want that liability. That race wants that liability, that's fine. But we think that there's going to be more races that are going to be relieved to have a vendor that they can rely upon to calculate tax correctly for them and allocate it appropriately. So there you go.
So we have a race asking if we do, in some hypothetical situation, get audited for back taxes, how do the individual races inform us that they've paid sales tax on past registrations?
Yeah, we're gonna. Yeah, if somebody comes after us, we're going to be going back and saying, hey, look, a number of these races collected sales tax. If you use the RunSignup system for collecting sales tax, like the version 1 that's existing now, we'll have some records of that, but we're likely to come back to every race in a state and ask for information.
And the other thing that would occur too, if that were to happen in a marketplace state, for instance, is that a number of those races would be nonprofits, and that state theoretically may have nonprofit exemptions. So that may be another way that liability would get worked down, is because of the fact that those exemptions would have existed for some of those races as well.
So what would you recommend to our customers who have already included sales tax in their current registration fees, and then they take that out in their books to send to their state? Would you recommend that they lower their registration fees or change anything in the process that they're doing if they are in a marketplace state?
If they're in a marketplace state, we're going to begin collecting on that, and we'll we'll give a timeline of when we will collect in that individual state. The race can make a decision about what they want to do with their registration fees at that point in time, but we don't have a choice. We will collect in the marketplace state. So the race potentially is over collecting, or might have the ability to have some additional money go to their own books.
If they're using kind of version 1 RunSignup sales tax system, we'll when we turn it on, say we turn on Pennsylvania on November 15th, we'll actually turn off the version 1 sales tax and turn on the marketplace. If they aren't, we'll have sent notifications to the races plenty, telling them when we're turning states on, and so they'll have to turn off however they do it, with extra fees or something like that.
We have several questions asking about virtual races and how this applies to virtual races.
Yeah, so virtual race is another interesting use case that we had to figure out. We believe that a virtual race, the service of that virtual race is delivered at the home of the person who's participating, and for ease of use, we use the billing address for the credit card for that. So that's where that would get taxed, is in the state where that registration occurred based upon the billing address.
Okay. We have a question asking about kind of designating a race versus a membership. So the question is, if they have a club, a running program that they are selling membership to, how do they designate that within RunSignup?
They're going to designate whether it's set up as a race or whether it's set up as a membership fee, and we're going to tax it whatever way they set it up.
So basically, if you set up your membership as a race, it's going to get taxed as a registration.
Yeah.
Yes.
Yes.
Okay. So I have already renewed my race for 2020 and already have registrations. Will I be able to go back and adjust my setup once your sales tax platform is up and running in November?
I think the answer to that is yes.
Yeah, absolutely. I mean, that's most, a lot of customers have open races, and our design is to, when it gets turned on, it's turned on.
Yeah. There's no ability to retroactively collect tax or calculate tax on what's already occurred, but certainly going forward, you can make adjustments while your race is open.
Yeah.
And then if all of my races for 2019 have already been held, do I need to go and renew them immediately so that I can set up the exemption, or do I just set up the exemption when I go in to renew each of those races?
I would say that you would set up those exemptions when you get to renew those races. And if you wait a couple of weeks, then that is going to be easier for you than renewing them now and then having to come back in and do the exemption piece.
Yeah, we're going to go through a few phases of UX cleanup and redesign over the next couple of weeks too. So it'll actually be easier, to do in a couple of weeks.
We have a question about tax on processing fees for a tax exempt organization if the registration is non-taxable.
So you have two different sellers. You've got the nonprofit who may be exempt in selling the race registration, but RunSignup is the seller of the processing fee. And RunSignup is a for-profit company. And so RunSignup does not have the same exemption that the nonprofit would have on their race registration. So those act independently because there's two sellers, one of the race registration and one of the processing fee.
So we have a question from somebody who just logged into their race dashboard and they see sales tax and sales tax beta under the financial tab for their race. What's the difference? What do those things mean?
Sales tax is the old sales tax system that has been there since, I think, 2014-ish or so, 2015. And that is going to go away once this system is completely rolled out. And sales tax beta is what we're currently talking about rolling out. And right now there's very, very limited visibility functionality in that sales tax beta tab. You can see the menu items, but you won't be able to do anything because only we can turn your race on, and we're not ready to turn your race on quite yet.
So this is a question from somebody who sells merchandise in a RunSignup store. And they pay sales tax on that merchandise when they order it from their local provider. Will RunSignup still collect sales tax, thus incurring essentially like a double tax on the store item?
So once again, RunSignup is not allowed to provide tax advice, but what you are is a reseller. And so that particular race should think about going and getting a resale certificate. The sale on RunSignup is not the resale. If you buy a merchandise, you may be able to buy that without sales tax because it is going to have sales tax when it's sold to the consumer.
Right. So their t-shirt vendor would exempt them because of a reseller agreement, potentially. And again, we do not provide sales tax advice, right, Kevin?
Exactly.
Very good.
More advice. How would sales tax apply specifically for race organizations that offer a mail my packet option for an additional fee? So that packet would typically include shipping the athlete's bib, their shirt, their race flag to their home prior to the start of the race.
So that, if it has a separate charge on our system, that actually is a taxability code. So shipping and handling is a taxability code, and it would get taxed the way the state taxes shipping and handling for that particular item.
Okay. I'm going to ask a couple of questions just for clarification. So there are things that we probably said earlier, but give different states and just kind of reiterate some of these points that are kind of confusing. So I'm based in Colorado and my race is held in Colorado. Colorado is no for taxing race registrations. That means that none of my runners will be taxed for their registrations, including runners from yes states like New Mexico, correct?
So that, I don't know if you intended, but that was actually a really hard question. And the reason is that Colorado is a home rule state.
Not a home run state, a home rule.
So what a home rule state means is that each separate jurisdiction in Colorado may have different taxing rules. And we think there are 64 of them. So think of that as 64 new states that RunSignup has to deal with above the 50 that we already have. And so the general answer to your question is you're correct. There'd be no Colorado tax on that sale, but jurisdictions could have a different taxing treatment on a race registration. So it does not necessarily mean that there's no tax. I don't even think I got to the New Mexico part of your question yet. But Colorado could have a tax if it were related to a taxing jurisdiction within the state, but not the state itself. Now, someone registers from New Mexico. So the state, the treatment on the registration does not vary for Colorado because the race is always delivered in Colorado. But what does vary is where's the processing fee going to get taxed? And if that registrant is using a billing address that's in the state of New Mexico, then the processing fee will get the tax treatment of the state of New Mexico.
So initially, this, I don't know how I'm going to ask this question. Some of these questions are pretty complex to ask. So if RunSignup is taxed on the processing fee and my company is nonprofit exempt, will you file the taxes on the non-marketplace states, or will my nonprofit have to do this?
So tax on processing fees, whether it's marketplace or non-marketplace, is always RunSignup's responsibility. So if you're a nonprofit and you've got this kind of weird scenario where your race is exempt, but you're in one of the few states that taxes a processing fee, and there's a tax that occurs in that state, then RunSignup will file that return as RunSignup's return in that non-marketplace state.
Just to clarify, in marketplace states, in a specific example, New York, RunSignup will collect tax on the merchandise and submit to the state, even if registrations are not taxable in that state.
That is correct.
This question is asking, is RunSignup going to pay the collected sales tax to the state, or is it set up where we collect, we report, and we pay it?
So that's really a marketplace versus non-marketplace question. So in a marketplace state, everything that RunSignup collects for sales that occur in a marketplace state, RunSignup will collect and remit to the state on behalf of all of the races, one big tax return. In a non-marketplace state, RunSignup will calculate, collect, and then pass the money to the race, and then the race files their own return and makes their own payments to the state.
And for the collection that's happening in marketplace states, what date is that going to be taking effect?
It's going to be a rolling set of dates, and we will announce that as we open up each marketplace state. Likely, all marketplace states will be up and going over the next 30 days.
We have one question that says, who will pay for all this additional work that RunSignup is doing? This isn't an employee question. This is a customer question.
RunSignup has this obligation that we have to undertake. We don't have a choice. We have to comply with these marketplace facilitator laws that are out there. We can't absorb the potential sales tax liability that goes along with it. And yes, we've made a very substantial investment in this.
It makes us more like a nonprofit.
Yeah, actually, we might be able to register as a nonprofit after this year, or for this year. But it's not really like every other feature, but it is like every other feature in one way that there's not an additional charge for it to people. But it's not like other features in that it doesn't feel good to add sales tax. But it's an obligation of ours. We've undertaken the obligation. We're funding that obligation, and we think that it creates over time a competitive advantage because races can feel good and confident about the fact that their sales tax is being handled properly for them, and they don't have a liability that's going to come from that in the future.
Yeah, look, we're an employee-owned company. I own most of it, but everybody in the company has options or shares in the company, and we don't have an outside investment firm that's really responsible for all this. We're responsible. So we also want to be able to sleep at night, and I don't want this hanging over my head. It would cause lack of sleep, and I don't like lack of sleep. So it's just something that we have to do. Our business model is actually a really good business model. We're not going to make tons and tons of money, but we're going to make enough money to pay our employees above average, and we'll be fine. And the way our business model works is that we charge a pretty low processing fee, especially when compared with competitors out there, and pretty much all of our features are free, as much as we can afford to do that. And we're going to continue to just crank out more and more functionality and features and do more and more for races. And that model's worked really well for the past 10 years. Every year we get more and more customers, and the customers that use us refer us to other customers, and they refer us to other customers, and it just keeps rolling. It's amazing to me, to have been here for 10 years, and we've gone from 0 to we're 25 or 30% of the market. It's amazing that we're now the #1 in the US. And I think the reason we are is that we're open, we're committed, we take responsibility. Our customers, we really care about our customers, and our customers really care about us. And we've got this synergistic kind of flywheel that just it's rolling, and it's going to continue to roll, and it makes us excited to continue to get more and more races on our platform. And the GiveSignup platform is just kind of more of the same. And like the nonprofit market is like, they're just dying for a company like us. And so we're going to continue to grow. We'll make plenty of money, and we'll do fine.
Okay, Kevin and I are rolling our eyes a bit about that tirade.
Well, I feel like this is very passionate.
Yeah.
Like this is very
Yeah.
important
No, it is.
to me.
So I feel kind of weird asking more sales tax questions after that.
No,
I will
go.
ask one more sales tax question that I think is a really great one. When we choose to absorb the processing fee for our participants, would we then cover the sales tax as well by default?
So if you, so the sales tax is calculated by what the registrant sees in the cart. So if the registrant sees a race registration fee and no processing fee, then the sales tax is calculated on just the race registration fee. Obviously, if they see both items in the cart, then it's calculated on both of those items separately. So potentially, if that's a way that you would like to do business, and you don't want, and you see that the processing fee would be taxable in a state where your registrants come from, and you want to avoid that, you could embed that into your registration fee, and then you wouldn't have that sales tax. Keep in mind, though, the processing fee is taxed in the state of the registrant. So if your registrants come from out of state, I guess they still don't have a tax, right? Because it's not a separate item on the cart. So yeah, so it's taxed the way the item is in the cart.
Yeah.
And then if the racers are the ones responsible for paying the sales tax, there isn't any additional charge to the race for all of this, is there?
That's correct. No, the sales tax is added onto the cart based upon the items that are in there and paid by the registrant.
Okay. So there's a lot of questions that are very state specific, asking, is the state a marketplace or not marketplace state? Is merchandise taxable or not taxable? A lot of granular type of questions. So we're going to be putting out a blog. One of the links in the blog is going to give you access to that spreadsheet that showed whether the breakdown of all the different states, whether they're marketplace or non-marketplace, and show you all the columns. So you'll be able to look at that. You'll also be able to share that with your finance team or your CFO to review. And we will also be publishing a recording of this webinar and following up on additional questions that we did not cover during this Q&A.
Yeah, so this sales tax blog is public now. I published it a little bit earlier today, just before the webinar, and it is a high-level summary of pretty much everything we said in much more condensed form than me ranting and raving. But inside of here, you'll see a link to a taxability matrix, and so the taxability matrix is alive from that point. And you can see that there's a bunch of people, there's 11 viewers of it already. So some of you are industrious and have figured it out already. But that's where it is. Once the system goes live on RunSignup, there'll be some tax pages on RunSignup proper, and there'll be a link to this spreadsheet. We're going to keep this as a Google Sheet because this is a living document, and we are expecting changes because change happens.
Any other questions, Allison?
There's still some rolling in. I'll keep, I think we'll just get in touch with the individuals who are asking those questions.
Yeah, that sounds great. All right, well, thank you all so much for taking so much time and appreciating what we're trying to do for you. Bye-bye.